Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 12th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. The market is currently awaiting CPI data this morning. Comes out very shortly here, an hour prior to the RTH Open. That's going to set the day off with a bit of volatility here. Any failure of prices in this area could open up a refill back into that rollover gap down below and back towards 4,600. Obviously, this market's been extremely bullish, so even if we do have a day down here, it's been a day down within the very bullish trend and could just kind of sit in this area until the end of the year and hold those gains. Very, very bullish overall. 4,600, 4634 half, those are big time levels. This is the 4,600 edge. 4634 half is the previous highs. And so to fail back below those zones would open up a broader pullback here of some nature, given all of the strength we've seen. But right now, again, as we've mentioned for multiple weeks now, no strong highs to work off of. We are clearly overvalued, 3 standard deviations overvalued right now, but at the same time, no rejection being seen just yet. Looking at the NQ, you'll see right here the NQ doing similar to the ES here, mostly sideways, very range bound, 26% of ADR heading into the CPI data. Same thing for ES, 26% of ADR. This one is approaching major resistance here. This is the previous year's high right there. That's about the 16,560 level. You have 16,570 as a 100% key range target. So hard not to see a scenario where this thing hits the previous year's highs at some point and then maybe begins to rotate back down if or should a rejection occur. Again, you're coming into the final portion of the 5-year profile here and new all-time highs. So again, likely to push up through this zone and then maybe work its way back into the gap down below over time. We'll see again how the market responds here today. But 26% of ADR heading into the CPI data number. By the time the day is done, we should have a high range day for the session. Now taking a look here at crude oil. This one right now down about nearly 0.9%. What we've talked about before is how the bearish trend remains intact from a short-term perspective and a medium-term perspective. And right now, bulls were looking to push prices short-term into this zone here, but between 72 and 74, that was going to be a bearish Puma trigger zone where bears will look to defend, and maybe we get another round of weakness ahead. We are at the right spot in the chart for a rejection, a decent spot in the chart. Previous year's low here, previous quarter's low here, but at the same time, we haven't seen a strong low yet. And the fact that we're still trending down means we may continue to push lower until we see that strong low. 67 and 68 are going to be some key levels there. 67 has a tremendous CLVN right here. That could be a target that could be reached here. Again, what we're looking for is a strong low that's going to set us higher into the end of the year and likely into the beginning of the next year somewhat. You have value right here. You have the previous mid here. So again, if we can find a rejection somewhere in this area, we could be looking at a bounce back opportunity. Right now, still in the downtrend here, still trying to find its lows, and we'll see again, can price continue to find a way to bounce back toward yearly VWAP. That's going to be the final ending level to target here by the end of the year if we can find a rejection down low. All right, taking a look here at gold futures. Real quickly with gold, this one down below 2,000 here briefly here today. Big time strong high at 2150, so it's been a 150-point reversal back down straight away. No real pullbacks to speak of, instead straight down. The idea was after we saw this rejection, we were likely to see a return back to 1950 by the end of the year. That is this yearly VWAP. We're almost there already. So any pullback could be seen as a selling opportunity as this market returns to 1950. Lastly, looking at the YM. YM, narrow range here for the YM as well. Not quite as narrow as the ES and NQ. This one's in the 30% range here. You can see right here, 37% of ADR, narrow range here. Volatility has dropped quite a bit here recently, but today could bring in a good dose of volatility. Again, if there's a rejection up here, we could go outside day down even briefly before we finish the day. But overall, we're at a very strong level of resistance here. 36.8 is the previous year's high. We finally made it. And it's also 36.8 is the key range, or rather the market structure edge. So we have the every 1,000 points on the 8s has been a major market structure edge. We're there now. And again, we've gone 1, 2, 3, 4 full distributions straight through, which is very, very rare. So again, at some point, now that we're at the edge, we may find some sort of rejection that helps us pull back and settle into a range and digest this recent strength. But right now, very strong and lacking a rejection just yet. All right, that is it for now. We'll see how this develops here heading into CPI data with Fed to follow on Wednesday. Have a fantastic rest of your day, and I'll see you in the trading room. Take care.